Taxpayers operate in a very dynamic business environment, and in a complicated world of international taxation, businesses operating globally or internationally would face a challenge to ensure being compliant with transfer pricing regulations, and here certainty would be a key. Taxpayers need a specific level of certainty in managing their potential risks, and here advance pricing agreements, APAs, help provide taxpayers with that certainty. APAs have been used by multinational companies as a way to avoid transfer pricing exposure and secure a measure of certainty in their transfer pricing strategies. So let's try to understand what does it mean to have an advance pricing agreement. Hello everyone and welcome to the TaxGate. Hit the subscribe button and let's get started. The APA or Advance Pricing Agreement is designed for all companies that have transactions with related parties, and here the APA is an agreement between a taxpayer and a tax authority made in advance, trying to agree on appropriate transfer pricing methodology that will apply to a specific set of related party transactions within a specific period. So under this agreement, the taxpayer agrees with the tax authority to apply a transfer pricing methodology for a future related party transaction to ensure their compliance with the arm's length principle, and accordingly the tax authority agrees to accept or not to challenge the applied transfer pricing methodology within the tax audits to come, provided that the taxpayer follows all terms of this agreement. Good. So, what are the types of an APA? Let's understand together. The types of an APA would be as follows. Let's start with the unilateral APA. The unilateral APA would involve only the taxpayer and just the tax authority of the country where the taxpayer is located. So it is negotiated with only one local tax authority, and accordingly it limits the risks of the transactions between domestic parties. Also, normally the procedures of unilateral APAs are relatively short compared to the remaining types of APAs. Well, also we have the bilateral APA. And bilateral APA arrangements involve normally four parties. So it would involve the following. The taxpayer. Also the tax authority where the taxpayer is located. In addition to the associated enterprise of the taxpayer. And finally, the tax authority of the country where the associated enterprise is located. So, here the negotiations include two different tax authorities, and accordingly such type of APAs limit the risks of transactions between a domestic and a foreign parties. Good. Finally, we have also the multilateral APA. And here the parties involved would be normally more than what we have in the bilateral APA. Here the parties involved would include the following. We will have the taxpayer, the tax authority where the taxpayer is located, and two or more associated enterprises of the taxpayer. And also two or more tax authorities of the countries where the associated enterprises are located. So here the negotiations include more than two tax authorities, and accordingly this APA would limit the risks of transactions between a domestic and a foreign parties as well. Great. So now, like anything else, APAs would have its pros and cons. So, talking about the advantages, here we would mainly highlight the following. APAs would be an effective tool that would allow businesses to reduce potential transfer pricing risks. Also, transfer pricing method being accepted in advance would give the taxpayer the needed certainty that the tax authority will not make any adjustments if the terms of the APA are met. Also, it would reduce the annual transfer pricing compliance costs. Good. So that was for the main advantages of having an APA. Now talking about the disadvantages, we would mainly highlight the following. Securing an advance pricing agreement is too much time-consuming. Also, APA requests would require a full disclosure of information, and here the taxpayers would be concerned about protecting their corporate secrets. Also, the information that would be requested in a normal transfer pricing audit would be less than what is normally required for an APA request. Well, that was a quick overview about one of the most interesting transfer pricing topics. Like and subscribe if you would like to see more interesting tax videos, and thanks for watching TaxGate.